This is an introduction to audit sampling. Audit sampling is the application of audit procedures to selected pieces of data, which are called the sample. All of the possible pieces of data within a set are referred to as the population in this setting. Audit sampling is used by auditors because examining all of the available information is too costly and too time-consuming and impractical in the time allotted for an audit. Consider the average number of invoices a company sends every year. There's no way auditors could look at every one. There's no way they could look at every cash collection that's processed through the accounts receivable system. There's no way they could look at every check. There's no way you could look at every operation of every internal control or every transaction that a company engages in. The only possible way to do an audit is to use audit sampling. In every audit, regardless of client size, we use sampling. We use sampling whether it's IBM or it's a relatively small audit client, because it's not possible to audit all the pieces of information given the audit resources that we have available. So it's used in every audit, regardless of client size, and the auditing standards allow for it to be used and specifically say it should be used. Sampling falls into two general types. One type is referred to as attribute sampling. This is the kind of sampling that is done when you're testing the internal control compliance. The concept is to try to determine if controls work as the client states that they work, or they operate as designed. We try to come up with the failure rate for the control and see if the failure rate is acceptable to us. The failure rate, or the percent of times a control does not operate as designed during the year, needs to remain relatively low if we're going to count on the control operating. Remember, the point of internal control from an auditor's standpoint is to ensure that all transactions of a similar nature are processed the same way every time. We cannot be sure that that's true unless we test operation of the controls. Substantive testing is used to estimate the dollar error in a client's account balance. So this is quite different than attribute sampling. In substantive testing, we're actually trying to get at the dollar amounts in the financial statements. We test balances by doing things like sending accounts receivable confirmations. And customers of our audit client reply back, and we enter the data from that sample into a computer program normally and determine whether there's a projection that the population, or the account balance in this case, is fairly stated or is not fairly stated. So is everything done in an audit on a sampling basis? No. The auditing standards state that it's sometimes necessary to examine the entire set or the entire population. One example is all individually material transactions. These are individual sales transactions, individual purchases, purchases of capital assets. Anything that by itself is material has to be tested, because if it's misstated, the financial statements will be materially misstated as well. Another instance where we examine the entire set is for material subsidiary balance. So, for example, a customer account in accounts receivable that's a material portion of the overall balance must be tested. Not just a few of those large balances, but 100% of those large balances must be tested. Sampling, statistical sampling. No. Attribute sampling for controls tests and substantive testing for balances and amounts could be non-statistical in nature, or it could be statistical in nature. The defining feature of statistical sampling is that it's driven by math and not purely by the auditors. If sampling is driven purely by the auditors, it's considered non-statistical. So let's compare statistical and non-statistical sampling for a minute. Consider sample size, or how many items have to be examined. In statistical sampling, there's some auditor judgment in determining the parameters of the sampling, but then statistics determine the exact size. Whereas in non-statistical sampling, there's only auditor judgment. The audit program specifies, look at 15 of these, or look at 1% of the balance. For sample selection, or which items will be included in the sample, if you're doing statistical sampling, only random selection of the sample is possible, or is allowed. If you're doing non-statistical sampling, the auditor can decide which ones to choose. They can be done randomly, or there can be a combination. You should realize that if you as an auditor do something like go to a drawer or a file that contains check numbers and draw them out, even if you say that you don't care which ones are in the sample but you just selected 15, it's considered judgmental selection. For sample evaluation, or what should be concluded based on the sample outcome, for statistical sampling there's a combination again of judgment where auditors set some parameters such as audit risk and math. Whereas for non-statistical sampling, there's only auditor judgment. So the auditing standards say sampling is fine. They don't say statistical sampling is fine. They don't say non-statistical sampling is fine. Both kinds are acceptable. Usually, if an auditor decides to go with statistical sampling, they're worried about going to court. The audit firm might have decided that it's just not worth the extra trouble you'll have in a court case if an audit goes wrong. We tried to explain to people the differences between statistical and non-statistical sampling. It's better to stick with statistical sampling. But either is fine. In most audits, auditors will do some of both types. So how do auditors decide which cases need statistical sampling and which don't? Well, generally the firm makes this decision for all the audits, so it's not something that you as an auditor will have to do early in your career at least. If the firm decides they prefer to be able to quantify the risks they're taking in sampling, then they'll decide to use statistical sampling. There is, however, additional cost in designing, selecting, and evaluating a statistical sample. You have to buy audit software. You have to have access to data in certain formats that fits the software and so forth. You also have to have the availability of computer software on the audit. And you have to have audit staff who are properly trained to implement statistical sampling. At many, many small audit firms, they do sampling on audits, and none of it's statistical. They decide how many. They'll tell you how to select the sample. They usually won't tell you which ones to select, but they'll tell you how to select, like select every 1500th check. And then when you come back with the answer, I found 3 problems out of 175, they'll decide if that's acceptable or not. This concludes our introduction to audit sampling.